My name is Hope Mindu, and I am going to be taking you through the IS 16 Property, Plant and Equipment lecture. This is part 1, and we're going to be covering recognition and initial measurement. By the end of this lecture, you should be able to define PPE. On top of that, you should be able to discuss when an item of PPE can be recognized in your financial statements. You should also be able to measure PPE in the financial statements initially and subsequently after you've purchased it. We're also going to look at the measurement models prescribed by IAS 16, that is the cost model and the revaluation model. You also need to be able to discuss when to de-recognize PPE from financial statements. We're also going to cover tax implications relating to IAS 16 transactions and the disclosure of property, plant and equipment in an entity's financial statements. So what is property, plant and equipment? Property, plant and equipment includes tangible assets that are held for use in production, for example, a factory, or held for supply of goods or services. Maybe you have a retail shop that you use to sell your products, or held for administrative purposes, so maybe you use it as office buildings. And it is important to note that these tangible assets should be expected to be used for more than one period. Moving on to recognition. So when does an entity recognize property, plant and equipment in its books? An entity will recognize property, plant and equipment in its books as per paragraph 7 of IAS 16 if it is probable that they're going to receive future economic benefits from using that asset, and they can actually reliably measure the cost of that asset. So I want us to focus on two different types of costs and discuss when we could consider them for recognition. So PPE has two different costs that you need to consider. There's initial costs and there's subsequent costs. So as part of your initial costs, you could possibly have incurred safety and environment, purchased PPE for safety and environmental costs. So such PPE is actually hard to prove. It's hard to prove that it's actually bringing in future economic benefits because it's just there as per legislation, right? But then it is essential to actually have it in order to have your PPE generating future economic benefits for you. So maybe you have a warehouse and it has to be fitted with some smoke screening device to make sure that you don't pollute the air. The screening device will not really bring any direct future economic benefits to the entity. However, for you to actually obtain future economic benefits from the factory, you need to have installed the smoke screen. So such costs, despite the fact that you actually can't prove that the future economic benefits flowing to the entity, have to be capitalized. So that's it for initial costs. Moving on to subsequent costs. I'd like us to focus on three specific types of costs. So there's day-to-day servicing. So the purpose of incurring these day-to-day servicing costs are basically for repairs and maintenance. And the costs are primarily made up of labor costs and the cost of consumables. These costs will be expensed and should not be capitalized to the asset. So they're expensed into your profit or loss. So that's the first cost. Okay, so moving on to the second cost. You might have to perform major inspections. So basically, you have an asset and it has to be assessed for faults at regular intervals. So such costs are capitalized to the asset and every time you actually carry out the inspection, despite the fact that you might not actually have found a fault. So any previous inspections will be de-recognized and the new inspection recognized into the carrying amount of the property, plant and equipment. So we're done with the second cost. Then let's move on to replacements. So maybe you have a plant, a gold smelting plant, and every now and again you have to replace the lining of the furnace due to the high heat conditions. Um, Such costs are actually capitalized provided that they meet the recognition criteria. So you go back to paragraph 7 of IAS 16 and ask yourself, okay, so will this replacement result in a flow of future economic benefits to the entity? Yes. And then you move on and you say, can I reliably measure the cost of this replacement? If yes, it then means you need to capitalize the cost of this replacement to your property, plant, and equipment. So I'd like to refer you to the paragraphs marked here. There's IAS 16 paragraph 10, which basically deals with whether to recognize costs. So I want to also refer you to paragraph 11 and paragraph 12 to 14 for all these costs that we've mentioned. Make sure you know where to find it in the standard, because you're going to get into your tests and exams with your standards and you'll have this information readily available to you. So it's of benefit to you to know where to find it. So we're done with recognition. Finally, in this section of the lecture, I would like us to deal with initial measurement of property, plant, and equipment. So paragraph 15 to 16 of IAS 16 tells us what costs to capitalize to PPE. So you're going to have to measure your property, plant, and equipment at cost. That is the price that you pay to purchase it. And it might happen that you actually do not pay for the asset on gaining control. Maybe you have come up with payment terms and you're going to pay over time. Please make sure that you know how to actually come up with the cost in that case. Because what is the cost of the asset? Is it the total consideration that you're going to pay over time? Does that consideration not include components that relate to financing? So an interest, so to say, because you're being given extraordinary payment terms. So in addition to your costs, when initially measuring your PPE, you also need to consider any directly attributable costs. These are costs incurred to bring the PPE to the location and condition for it to be ready for use. You also need to consider the initial estimate of dismantling per IFRIC 1, and we're going to cover this in detail in one of the coming lectures. So it does happen that sometimes you actually do not go out and pay for your asset. Maybe you exchange assets. So how will you initially measure an asset that you acquired through exchange? So this will be measured at the fair value of the asset given up, because that is the consideration that you paid to get the asset that you exchanged in. Thank you. We're done with recognition and initial measurement. I look forward to covering more lectures with you.